Hello guys, we're going to get started whilst we're waiting for a few more people to join. But just before we get started, thank you to everyone who's joined us live. This call is obviously being recorded, so you guys can watch this back at any time. In today's stream, we're going to be doing a complete introduction to trading walkthrough. So going over multiple different things. First of all, the key terms, different order types and how to place them. Getting our head around pips, how that works, how to place trades, how to calculate lot sizes, layering, and then the psychology, mindset, and risk management behind trading. So we're only going to be running this call once. Moving forward, our evening educational stream, which is generally on a Monday at 7 p.m., is going to be more around the mindset, psychology of trading, and the market overview. However, if you're new to trading, you can watch this back at any time because, like I say, it's being recorded. Before we get started, a few quick house rules as always. The content in the stream is for obviously educational purposes only. I'm not a financial advisor, so anything you do with your own trading account is your own personal responsibility. Anything mentioned in this call does not constitute financial advice, and obviously, past profits do not guarantee future results. Now that's out of the way. Let's first of all start off. Can you guys let me know in the chat if you can see my screen? Hopefully you can. What I'm going to do is I'm going to get move over here and just start with some key terminology. So if there's people who are obviously new here, has anyone said, oh, we've got something in the chat. Jack can see my screen. Cool. We're going to go from very, very basics. I'm looking through names. I can see we've got Marius in here. One of our killer members who's been flying recently. Most of this stuff's going to be pretty basic for you, bro. But hey, always worth going over a bit of a refresher, right? But you'll find this all very straightforward, man. But later on in the call, we'll look at the trading day and a few other bits and pieces as well. So we're going to start off by key terms. Now, this is super important. You guys may think this is basic, but it's imperative that you know all of these. So obviously, I'm going to put the shorten. TP is take profit. So if you see any of these terms in the chat, SL is stop loss. BE is break even. Now, what do these mean? Take profit is basically our profit targets. Stop loss is where the trade closes if it goes against us. So that's why we put a price in which if the trade goes against us, the market will automatically take us out of the trade. And we do this to limit our risk. And break even is obviously when you break even on the trade, right? So when you're closed out at your entry price, so you don't make a profit and don't make a loss. So it's important that you know these terms because you'll see very often in the chat, I'll say stop loss to break even, for example. Now, one thing to bear in mind is everyone should be managing their trades in accordance with your own personal circumstance. That comes down to loads of different things. That comes down to one, your trading account balance, two, how that's going for you, right? Are you in profit for the day? Are you in loss for the day? What is the situation? What is the context around your account? So you'll see it all the time, but we get loads of questions about this in the chat. And it's important that you kind of make decisions around your trading account based on like your specific scenario. But what some key rules when you're copying trades are is if the trade has hit TP2, then the trade is no longer valid. By that point, the trade is closed. If it comes back to the entry zone and you enter it, that's up to you. But the trade is no longer valid. So if it comes back to the entry zone and hits stop loss, that's not a losing trade we've sent. So as long as the trade hasn't hit TP2, you are welcome to enter. Yeah, and I'll get into where you enter, etc., in a bit. So as long as the trade has not hit TP2 or the stop loss, the trade is still valid. Now that doesn't mean we're 2 pips away. We just about almost hit TP2 and you enter at that price. This is what's super important. If I send, I'm going to quickly, right, actually, I'll write it here. You'll see with the trades which we send in the channel, and if you're watching them on live stream, I normally say the range, but my range of entry is always 40 pips, which means there's a $4 price movement in the price of gold. Now, let's give an example here. Let's say really round numbers, right? Let's say we are selling and our entry is 5,000 to 5,004. So I'll always say to sell, let's just give you some context here. Let's say this is our entry zone, right? So the top of here is 5,000. The bottom of here Oh, sorry, it's the other way around. Let me just swap it around because obviously we're selling, right? Let me just move these around. Bosh, bosh. Right. So if we're in a sell position, we're always going to be moving up to a zone, and when we hit the beginning of our entry zone is when I will send the trade. Okay, so when I execute the trade, it's at the bottom of the zone. Now, by the time you load your MetaTrader, there's a delay in that. If you're not on the live stream, obviously, if you're on the live stream, then I say, I'm buying now or I'm selling now, so you get a better entry. If you can't be on every live stream, completely appreciate that. People have other commitments, right? You have work, you might be on a work call, you might be in the office, so you can't sit on every live stream. That's fine. So it's important that you consider the circumstance of the trade and what price is doing when you go to execute, when you open your MetaTrader app. So in this scenario, right, if our sell entry, I'm just going to go back here. Let's go back here. If this was the trade, right, we've got a 40 pip stop loss. Do you guys understand that? So a 40 pip entry zone. So 5,000 to 5,004. If you take away the two numbers, it's $4, right? There's a $4 difference between these. The entry zone for my trades is always going to be the same, unless I state otherwise. But 99% of the time, it's in the same format. Our stop loss is 20 pips outside the entry zone, or 60 pips from the beginning of the entry zone. So in this, it would be 5,006. And I'll take profits in 20, 40, 40, 60, 110, 160, 210 pips from the entry zone, right? If you want to understand pips in relation to dollar amount, because sometimes pips confuse people a little bit, just take off the zero. Yeah? So you can just say that these TP targets in pips are the same as the TP targets in dollar amounts. So $2, $4, $6, and so on and so forth, right? Of price movement. So in this example, our TP1 should be, if we take away $2 from 5,000, the bottom for entry zone, so it's 4,998. TP P2 is 4,996. Oh, that's a dollar sign. 4,996, right? And so on and so forth, right? So can someone let me know in the chat so I know that you guys are following? What would our TP6 be in this scenario? So I know that you understand pips. Don't worry if you get it wrong. I'd rather you fucking guess and get it wrong because then I know I've not explained it well and we can repeat. If you guys don't understand this, then that's fine. So what would our TP6 be if it's 210 pips from the bottom of our entry zone? See if someone can get it. 4989, Johnny says, and that is perfectly right, right? Does everyone understand how Johnny got to that number? 4989, right? So 210 pips is what? It's, yeah, Chrissy understands, yeah. It's $21 movement in gold. So 5,000 take away 21 is 4,989. Now, in theory, you don't need to work out these figures, right? Because we give this entry zone. The reason for this exercise is more so you understand how pips work. Yeah, so on gold, let's now say, using this same thing, let's say this price here is at, we can make it a little bit more difficult, 4,999.5. How many pips is this from 5,000 to 4,999.5? You might have to think a little bit more. Someone let me know in the chat again. We're waiting for an answer to come through. Who's going to be first? Who is the class genius? Chrissy Close. Close. It's a $0.5 movement, right? So apply this to this, yeah? So a $2 movement is 20 pips. So a $0.5 movement, so 2 to 20 with times by 10, so $0.5 movement is 5 pips, right? Do you get that? So if just to make it really easy to understand, if this price down here is 4,999, yeah, this one down here is 4,999. We've got a $1 movement, which is 10 pips. This is half of that, so it's 5 pips. Right. So hopefully you guys all understand how pips work. It's super important that you do. So you can make, this little basic things like this, although may sound trivial when we're looking at it now, it's important that you understand because it will allow you to make quicker decisions when a trade comes in, right? Because you just understand what we mean by a pip. Now, let's move all the way back to this example here. So we've got 5,000 to 5,004. So when by the time, obviously, I place the trade at 5,000, that's where I want to sell. Then I need to send a message into the channel. If you're on live, obviously I say I'm selling now at 5,000. Super easy. You click sell at the same time. Boom. Straightforward. Job done. You've got the same entry. By the time you've placed the trade, if you're following the actual message, right? Two things could have happened. Price, or three things could have happened theoretically. Price could have bounced, could have moved further into our entry zone, or it could have done either of those things and be back at bang on the entry by the time you enter the trade. So there's three different scenarios, and you're never or very rarely going to get the exact same entry by the time there's a time delay, right? Price moves. So you've got two different scenarios. In scenario one, when price is outside the entry zone, what do? We do not enter the trade. Why? Because we are selling, Levy, it's very straightforward. The sell is within this entry zone, right? I'm saying that I think selling gold between these two parameters, between 5,000 and 5,004, is a good place to sell. And what I see all the time is price will come down and price might be at 4,997 and people enter. Well, you're not following the trade, right? Okay, so in this scenario, you do not enter. And I'll get on to what you can do. Okay, in this scenario, when the price is in the entry zone, what do? You enter the trade. Fantastic. You've got a better entry than I got in at. I got in at 5,000. For you, there is now less risk because our stop loss is up here. Right, I'm going to write it up here. Stop loss at 5,006. So between my entry price and the stop loss is 60 pips, you may enter, let's say here in the middle at 5,002. So your stop loss is 40 pips. Even better, right? You've got less risk. Fantastic. In the scenario, the price is up here. What do? You, hopefully you're following, do not enter because the price is not in the entry zone. Now, you can sometimes theoretically enter up here. Yeah, it's up to you. What I would suggest doing in a scenario like this is looking at the chart yourself and making a decision or asking in the chat. Generally, you want to enter in this zone. The reason why entering up here may still be good is, for example, if we've wicked up here and then we've closed down here, and it still looks like we're going to reverse, well, we've not hit stop loss or TP2, so the trade is still valid, okay? Now, I'm going to go through layering in a second, but let's say we're going to now go over what happens in this scenario when you look at the trade, we have bounced and we're outside the entry zone. So let's draw our TPs in. So we've got TP1 here. Ignore like the distance gaps might not be perfect. I'm just doing it. Just this is for illustration purposes. So we've got 4998 is TP1. By the way, guys, let's go and ask questions if anything doesn't make sense. You'll be able to watch this back as well. So if you're not taking notes, you should be, but you can always watch this back. Right, the two important take profits are TP1 and 2. Right? Why is this? Well, when we're setting up a trade, we want to ensure that we're not risking more than we're fucking targeting, right? Because I see people do this all the time as well. And this is stupid, right? Why the fuck? Think about it from a betting standpoint. We're not betting, we're taking an educated decision based on what the market is doing, right? Based on my experience. But why would you want to risk, let's say, we're going to do this in dollar amounts, right? It's different, but let's use dollar amounts here. Why would you want to risk $6 between this entry at 5,000, 5,006 to then close your trade with $2? Well, that's stupid, right? Because you need to win 3 trades to just account for one loss. Do you guys follow that? Because on these 3 trades, you're making $2. Theoretically, obviously, it will vary depending on your lot size, but the actual amount will scale evenly. But on this stop loss, you're losing 6. So you need to then win over 75% of trades to be profitable, which we do, but it's a stupidly silly way to do things. So TP1 is not there for a price you take profit, right? It's there to help you manage your risk. In some scenarios, we will take profit here. I'll explain why in a minute. So the scenario which we're discussing is what happens if you go to enter and let's say price is here. Then what do you want to do? You can set an order within this zone, a future order. Let me know in the chat if you guys know how to set these orders. If you know how to set the orders, what is the order type that you would set in this scenario? Let me know. If the trade is anywhere before TP2, you can generally enter. If it's before TP1, fantastic, right? Because we've not taken profit, we've not hit stop loss. Generally I'll set my stop loss to break even at TP1. Yeah? Why is that? That's to take our risk out of the trade. But if it's hit TP2, like I said before, the trade is invalid, right? So if we've hit TP2, if price is down here, by the time you go to enter the trade is gone and you do not enter. It's very, very simple. Okay? Because we've all fucking taken profits, right? Why would you be entering? Then the trade's no longer valid. We're all winning. Why would you then take the trade? Price might come back up to this zone and hit stop loss, but we're not going to lose. You're going to lose, right? So you don't want to be in that scenario, right? So if it's anywhere before TP2, generally you can enter. Obviously, as you have a bit more experience with trading and you're looking at the charts yourself at the same time, you can make a more educated guess. It's difficult for me because I need to set a blanket rule for everyone, right? Which I think is going to put you in the best kind of, that give you the best chances, right? So this is the blanket rule that I generally say, like this is what I would do if I was completely brand new. But obviously, what you do is your own decision, right? But after TP2, I personally wouldn't be entering the trade. Yeah, so if it's anywhere in this zone, you can enter, but only in this entry zone. So what do you do? No one's put it in the chat. Well, when you go into your MetaTrader app, you'll see there are five different types, or there's more. But anyway, let's do the main ones. You've got market execution. So everyone load up if you don't know what these are, load up your MetaTrader app and see, or Vantage if you trade on the Vantage app, load it up and see that you understand how to change between these. The two main ones are buy limit and sell limit. You do also have other orders like buy, stop, and sell, stop, and there's a few more, right? But do not worry about these. I will never take those. I never ever use those entries, or very rarely, like maybe like 0.001% of the time. And if I do, I'm not sending the trade to you guys because we keep it simple here to make it easy for you as you learn. So there's three types of orders that you could potentially place. Market execution. Again, we're going straight from basics is what do you think that means? We execute at market, which means right now. So when you click buy or sell, when your order type is on market execution, and guys, if you don't know if you don't know where these order types are in your app, then let me know in the chat. But I'm going to assume you do. That means when you click buy or sell, you enter the market right there and then. So if price is down here when you enter, or it's just below TP1, as long as it's between the entry and TP2, still the trade's still valid. You do not market execute, right? Why would you not do that? Because we're not in the entry zone. So if you market execute, you're going to execute at where price is right now, right? Which say might be at 4997.28, let's say, right down here. This isn't the trade. The trade is to sell between 5,000 and 5,004. So market execute in this scenario. Let me hopefully I'm explaining this well. I'm not a teacher, but I try my best. Is bad, right? Very bad because we're not entering in the trade. So why would you enter here? Just so this makes sense. Like your risk is massive, right? You're risking in this scenario, all of this bit, all of this, all the way up to the stop loss. And for us, we may close at TP3. So your risk reward, what you're risking in comparison to your potential profit is, for your learning purposes, I'm going to use a fantastic word, shit. Okay? So you don't enter here. What do you do? Well, let's just make it very, very simple. This is a sell trade, okay? So there's only two options. There's either buy limit or sell limit. Which one do you think it is? It's a sell trade. Pretty common sense. It's a sell limit order. If we just move up here quickly so I can just explain these order types. to you. So on this scenario, is a sell limit. Does the market limit stop and stop limit drop down? Is that the market limit stop and stop limit drop down? Yes, it is. So you should, Chrissy, you should see on the Vantage app, you have maybe it will say market limit. I don't, to be honest, I don't trade on the Vantage app. So tell me all the options, but you should have buy limit and sell limit or something very similar to that. You do get buy stop and sell stop, but ignore those. I'm not even going to explain what they are right now because I don't want to confuse you guys. I'm just going to explain limit orders. So what a limit order is basically what we're saying is when price moves to the price we want to enter, we're going to expect it to reverse, right? And same here. So in this scenario, if we are at this price here, yeah, if this is where we are at the time when you see this is our target entry price up here, we're going to set a sell limit saying when price gets to this point, I want to sell. And conversely, you would set a buy limit if we are right here. And then when price gets to this arrow here, which I'm going to change to orange, we're here. And when we get to the orange price, we want to buy. So buy limit and a sell limit. Okay. So in this scenario, coming back here, if we are at this price down here, right, for the concept, for the purpose of this example, at 4997.28, we want to set a sell limit order, right? And how do we set the sell limit order? When you go to set the order, yeah, Chrissy, I'm just let me just answer Chrissy's question. Market is the main one, correct? So that's market execution. So the next is limit. So you'll have buy limit or sell limit. You can set a limit order. Maybe it says limit, and then you click buy or sell on the Vantage app, right? But yeah, it's a limit order. So in this scenario, well, what are we going to do? Where would we set our buy limit? When you go to the a sell limit, it will ask you for the price where you want to enter because we're entering a future order. So where let me know guys where in the chat where do we set our sell limit for? If price is at 4997 and we want to enter between 5,000 and 5,004. Let's just assume you're going to take one entry and that's it. Because we've not got onto layering yet. We'll get onto layering in a minute. Let's see if anyone knows. Give you another 5 seconds. If no one's answered, then I will explain. So, we want to obviously sell within this range. If you're taking one order, you would set your sell limit for 5,000. So you go sell limit, price at 5,000, stop loss at 5,005. And that means when price comes back up, if it comes back up to an entry, your entry will be triggered. It will be live at 5,000 and your stop is set at 5,006. Now, one thing before we continue, which I forgot to mention back here, which is fucking extremely important. This is going to be the most important. If you take away one thing from this call, this is it, okay? You do not enter a trade, please, because otherwise you're going to fucking regret this decision yourself, unless you are setting a stop loss. Every single trade that you place needs to have a stop loss before, okay? There's people, I don't think Marius is here anymore. Oh, he is, indeed. Lots of people, including myself, including Marius, including anyone who has been in trading for a long enough period of time, will have made this mistake. I have made it and I lost money. Lots of everyone will make this mistake at some point. So don't just listen to me and always don't click buy or sell or set an order unless there is a number in that stop loss box. Why is that? That's simply because price could just shoot all the way up within half a second because of news, because Trump decided to nuke fucking Israel or whatever. Who knows what's going to happen, which can affect price. So if you don't set a stop loss, what are you doing? You're leaving yourself exposed. And you'll get away with it 99% of the time because you'll have time to quickly amend it after. And this is what everyone does. And they get complacent and they think, oh, there's plenty of time. It's not going to move that quickly. I'm telling you, one time it will move quickly and you will get fucked. So listen to that. Anyway, let's move on. You would set your sell limit order for 5,000. So in this scenario, you're going to have a sell limit order with price or entry/entry, whatever it says on your app, right? At 5,000. Stop loss at 5,006. The next question is where do you put your take profit? Right? Because we've got to take profits down here. I'm gonna add in all of them, right? TP3 is at 4994. TP4 is at 4989. TP5 is at 4984. Right, let's move this up so you can see it. Which TP are we going to put our take profit at? Well, this is up to you, but it's certainly not. Right, let's use a trend so I can cross these out. It's certainly not TP1, and it's certainly not TP2. Why? Hopefully you guys are following, because then you're targeting less than your risk, right? Because this is either if we're not layering would be free. Chrissy's got it, yeah? So if you're not layering the trade, you've got to target at least the same risk. Right, so TP3 would be at TP3, which is at 4994. If I was brand new to trading and I was in one of the two scenarios where I'm not comfortable layering, because you've not got enough experience yet. Or you may be in the situation where your account balance is small. And with your risk, I'm not going to go through how to calculate your risk. You should have watched the PDF guide, which goes through how to use the FX calculator app. If you haven't, I'm not going through it on this call. There's a PDF guide there, and this video is there to show you how to do that. Click the pinned message in either of the two channels, go through that PDF guide, each of the 7 steps, and that will answer your question. But if your lot size like for let's say the risk you're happy to take per trade, which is generally like 1, 2, 3, 4, 5%, shouldn't really be more than that. If that doesn't allow you to layer, then I would always do this setup, right? Whether you're at market execute or a limit order, stop loss is 60 pips, take profit is 60 pips, job done. As long as you are then winning more than half of the trades, which you should be, right? It avoids issues with you fucking up the layering. And as long as, like, look at the law of averages, right? I mean, you've got to be super unlucky. I mean, today I sent 12 trades, maybe 13 trades. Baptiste, I know, is away on a yacht in Monaco, so he didn't send any trades today. I sent like 11, 12 or 13 trades today and hit 2 stop losses. So if you applied this and you took at least 4 of the trades out of 12 today, you would be at break even. And if you took more than 4, well, I say if you take at least 4, you would either be in profit or break even. You'd have to be pretty unlucky. 2 of the ones you chose out of 12 would have had to be the stop losses, right? So you should be making money using this scenario. Chrissy said she laid first time today and profit on both. Fantastic, right? We're going to get into layering in a minute. But if you're just learning, this is your setup for this particular order. If price is down here, you don't place the trade. Yeah. And if price is up here, you enter, if it's in the zone, you can enter at market price. And let's talk about this scenario. Let's say you enter within the zone, okay? So what do we do in this scenario? We are market execution because we're entering, oh, it's caps lock, but let's leave that there for now. And let's say you enter at 5,003.5. Let's give that round numbers. So your stop loss is obviously at the stop loss at 5,006. So in this scenario, entry, there we go. In this scenario, our stop loss is 25 pips, right? Hopefully you guys are following. That's what I'm getting there. TP1 is at 98, which is 45 pips. So in this scenario, you could potentially close this. Your risk reward on this is positive. TP2 is at 65 pips, right? Down here, 96 from your entry at 005, yeah? Is at 60. Is it more than that, isn't it? No. Oh, no, 75 pips. Is it TP2 is at 96 before? Yeah, 75 pips. Ah, TP1 is at, hold on. TP1, ignore me, my maths is terrible. TP1 is at 55 pips. So what would you do in this scenario? Now, this is where it comes down to managing your account. Yeah. If you've like not if this is your first trade of the day, I would personally target TP2. Right? Why? Because then if the next trade hits stop loss, you've not lost anything. Yeah? Do you understand what I'm saying? Because your target is 75 pips. Generally, your stop loss is going to be 60 pips. So this is where it comes down to managing your account. If you're in loads and loads of profit for the day and you're watching and you think price is going to reverse, fucking close it at TP1. You're still making double what you risked. Obviously, in all these examples we've done so far, we are talking about one entry, right? Yeah, you kind of get this? So hopefully, let me know any questions before I move on. Hopefully this makes things really straightforward. You could flip this entire thing. I'm not going to go through buying examples because it's the exact same thing in reverse, right? If we were buying, our stop loss would just be down here at 4998. This stop loss would be our TP1 and we'd be buying at 5004 to 5000, right? Really straightforward. So we've understood so far, what have we understood? We've understood key terms, we've understood order types, we've understood pips, and we understood how to place trades when you're taking one entry. The next level up from that is layering, okay? And this is where it gets a little bit more confusing. So if you followed everything so far, and this should hopefully make sense to you, if this is all new to you, and don't worry about this next part. You should listen to it so you can start to understand it. But for the time being, until you're consistent and you're comfortable managing trades, I would just place the one entry. Keeps it super straightforward and it makes the numbers really, really easy, right? You've got to win more than you lose. Not difficult, right? Just don't go off placing your own trades because we see what happens when people do that until you get experience and you know what you're doing, right? How do we layer into this position? Well, I personally would like to layer, right, every $1. Which what does that mean? In this scenario, we've got one entry at 5,000, one at 501, one at 502, one at 503, and one at 504. So we've got five entries maximum on this trade. Now, how do we calculate what position size we do? Well, you obviously you've used the FX calculator app to calculate your total position size, your max risk, right? If you're happy to risk, let's say 3% of your balance, right? And it spits out that position size, that's your max risk. You shouldn't be taking anything more than that per trade. Say it spits out, let's use some like numbers for small accounts, right? Say it spits out 0.03. In this scenario, you can only take three entries, right? Because the minimum lot size is 0.01. So this you can only get three 0.01s into 0.03. Yeah. So you can have three entries if that your max lot size is 0.03, 2, 3. I've just copied and pasted it. Three entries at 0.01. So if you were to lay this position, it's up to you where you lay. You could decide to layer like this, for example. So one at 50, one at 5,000, one at 5,002, one at 5,004. You might want to do it like this. This kind of comes down to your preference, right? How you want to manage your trades. The important thing is how do we take profits? Because we're getting a little bit more complicated now, right? We've got three entries. The first thing you want to do, well, let's just say actually, let's make a really simple example to start. Let's say they're five 0.01s, right? Your total risk you've worked out is 0.05. Great, you can have five entries at 0.01. Well, this is where it becomes a little bit more nuanced as to how the trade plays out because every trade is going to play out differently. If we come here to 0.01 and just tap in that first entry and then go, we need to think about this now. If this trade comes and hits stop loss, you're at 60 pips, but only on 1/5 of your position size. Okay? So this is where it's really important. It gets a lot more complicated if you do later. Why? Because then let's say the next trade comes and fills the entire entry zone and hits stop loss, then you're at a much bigger loss, right? Than if it just taps in one in this scenario. Because you've only got 0.01 lot, which let's say you close at TP3. But in the second scenario, you've got 0.05 lots, which have closed at 60 pips stop loss, right? So you're at five times the loss than you are the profit. Okay? So in a scenario like this, you need to be very, very careful, and you would need to be targeting much, much higher. Yeah. If you're completely new, I would personally be placing just one trade with the entire position size and either place it here or place it wherever it is in the zone when you enter, right? That makes things way more straightforward. If, let's say, to layer, and the best way to really think about layering is have less to have less entries really, because the more entries you have, obviously you leave yourself exposed if we hit a full stop loss. The better thing to do, and I put five entries, right? But my total risk is far less than 1% of my account, so I have a big account. So ignore what I kind of do, and you've got to work out what's best for your account. Let's say your total is 0.02 and you place these, let's say these two entries, right? This is a lot more straightforward because if we come straight through, right, what's the scenario? Well, our average entry is here, right? So what we've actually theoretically done is we've entered 0.02, our whole entry at this middle point. Do you kind of follow that? Why that is? Because if we average our entry 0.01, 0.01 here, this is the average entry of the entire thing. So in this scenario, what is our stop loss? Is 40 pips, right? Because it's from the average entry to the stop loss. So in this scenario, then we want to target, we can target 40 pips minimum, right? Which is TP1. Really straightforward. If we just tap into the first one, we need to think, okay, well, what happens if we lose the next trade? If we lose the next trade, we're risking 40 pips. Should be closing minimum at TP2. Yeah? Because then you're covering the event that the next trade shoots. Oh, do you kind of understand what I'm saying, right? You're taking 40 pips on a 0.01. Oh, sorry, ignore me. Should be targeting 80 pips. Ignore me, that's my bad maths. Because we've got 0.01 at 80 pips is the exact same thing as a 0.02 at 40 pips. Does that make sense? Let me know. I don't know if I've explained that bit very well. I feel like I'm not explained that section very well. So let me know in the chat. Well, I basically say if you do 0.01 lot, it's half the position size. So 80 pips on half the position size is the same as 40 pips on double that position size. Yeah, Luke said it makes sense. So if you're splitting it up like this, then you know if in the event that only one of your entries gets tapped in here, you need to target minimum 80 pips to cover the event that we have one that goes straight through and hits stop loss. Yeah. If we let's say we fill the entire zone, this is why it becomes a little bit more confusing, and this is why I say if you're completely new, you can practice this, but I would only place one entry on your actual live account. You can practice this layering thing on a demo account just with your own trades, right? Really straightforward. If it fills the entire zone and it comes into profit, well then how can we manage this position? Well, our average entry is still here at 0.02, so we've got 40 pips stop loss. So you could theoretically close this at TP1. Yeah, because you've got a 40 pip take profit, you're covering for the next loss. Yeah, really, 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 really straightforward. If you're in nice profits for the day, maybe you hold it to TP2. You set your stop loss at break even here, and you hold it to TP2 or TP3 or TP4. Fine, right? You're like, this is why I say every decision, it's difficult for me to set a blanket rule because it's nuanced. It depends what trade you've taken today, what your account balance is. If you've hit a stop loss, everyone else might have hit TP. You've just taken the first trade of your first trade of the day you've copied is a stop loss. You got unlucky that day. So you need to make these decisions based on your account, right? It's about managing your account. So this kind of makes sense. Let's then say you take three entries here, right? So let's say your total thing, just to do one more example. So your total risk is obviously still 0.03, right? So it's still 40 pips here. This is your average entry, right? Because it's still the average of the three in the middle. Yeah, really straightforward. They're all evenly spaced. And you could do this by setting sell limits at all of these prices, so they get automatically triggered. Yeah. In the event it hits just your first one, then what do you need to do? Well, if it went through and hit all of them, okay, then we have an average entry here at 40 pips, right? So you need to do 3 times 40. So you need to target minimum 120 pips in this scenario to cover your next loss. Yeah? Following, because 0.01 by 120 pips, you can think of it like 0.01 times 120 is the same as 0.03. Well, you could do one time, just think about the one. 1 times 120 is the same as 3 times 40, yeah? Get it? So you shouldn't be closing this scenario if you're layering like this before 120 pips. If price comes here and fills both of them, these first two, and then goes down, well, where is your entry? Right, your average entry is here, 0.02. Oh, fucking hell. This is one more example, and hopefully you follow. Your average entry is here, right? Because it's between the two. Get rid of this. Our stop loss is what? It's 50 pips at 0.02. Boom, boom, boom. We know if it fills the entire zone, it's 0.03 at 40 pips. Yeah. So you want to be targeting 60 pips. Yeah. Do you get that? 2 times 60 is 120, is the same as if you had a zero point 0.3 averaged here times 40. Yeah, hopefully that kind of makes sense. So you'll kind of get to grips with this as you kind of learn to layer. And layering is good if you can do it properly. Right? Why? Because you're seeing loads of scenarios, right? Where I manage my trades this way. Because when we fill this entire zone, and I've got entries at all of these different price points, and then price comes back to the entry price. Well, the people who only took one entry at 5,000 are at break even, right? So you can't take your risk out of the trade in this scenario. But what can I do? I can close this one at break even. I can close this one in a little bit of profit. I can close this one in a little bit of profit, and I can set break even on these two. So now my risk on the position is small, yeah, and I'm running in this trade risk free at this point. Whereas the person who put one entry at 5,000 needs to wait for TP1 because you need to have a bit of breathing room, right, to set your stop loss to break even. That's the powerful thing about managing risk. Now, if you're on live streams, you see me doing this live, right? So if we just quickly reverse back to here, like in certain scenarios, I think it was in a trade today actually. We came up like this, and we came down to here. In order to, because I didn't like how the trade was playing out, I was saying on the stream, I'm closing this entry here. I've still got these two open, but I'm reducing my risk in the event we come to hit stop loss. Yeah. Then we came here. Then I closed this one. So this one's still in loss. These two are in profit. Then I closed this one in a little loss. So overall, I'm at break even because I closed these. I closed these two at break even. This one at a tiny loss. Well, fine. I'm in a tiny little bit loss, but I've taken my risk out of the trade with a £20 loss rather than the £200 or £300 or £400 loss, right? Because I managed the trade. Then these two are set to break even, and then we're risk free. And if we continue down like we did, and we did like 120 pips, then boom, we're quids in. But equally, if the trade was to go against us, I would have been breaking even here, right? Yeah, so you kind of get this. Let me know if you guys got any questions. That kind of covers how the different scenarios of how you place trades. If you're new, which I know quite a lot of you in this call are, just rewind and go all the way back to placing that one entry. Yeah, and obviously you still need to do a little bit of calculating because if we're at the entry price, you enter it's straightforward, right? 60 pips, 60 pips. But if you enter somewhere else in the zone, it's just only a little bit more calculating if when you check price it's in the zone. Then you need to work out what your stop is, what you need to target. You want to target 60 pips from your entry minimum because that covers your next stop loss. Got it? Got it. Let's say you entered this first trade then. I'm going to do like a running scenario to show you some account management. Let's say you enter this trade at 5,002 and it hits stop loss. So trade one is a stop loss of minus 40 pips. On trade two, price is down here when you went to enter, so you set a sell limit of 5,000. Well, you're down 40 pips so far. So you want to be targeting minimum TP2. In this scenario, okay, I'm down for the day. I'm trying to get back to break even or in profit. So what am I doing? I want to avoid two losses in a row at all costs, right? So I'm certainly bringing stop loss to break even after TP1. I'm keep taking my risk out that trade. And then at TP2, depending on how the trade's running, if we're like closing really bearish candles, and we hit TP2 and like we're closing really bearish candles, fine, I might hold it to TP3 and try to recoup this 40 pips and make 60 pips back. Yeah. So you've got to read the trade. Let's say on the second trade, again, you got an entry here. Well, then closing at TP1 is 40 pips. This is 60 pips. Yeah. Hopefully you guys follow. Unless there's any questions in the chat, then that kind of summarizes all the bits we've gone over so far, which is obviously key terms, all the types, understanding pips, how to place trades, both with one entry or layering. Yeah. And obviously the layering comes with a bit of experience. Yeah. The actual layering of the positions is easy. You just set buy or sell limits. So you enter the first one at market with what I do, then I set buy or sell limits for the rest of them. But it's the actual management of the trade which is important. This is where a lot of people go wrong because they'll close all of the trade at TP3 when they've only got one entry, but then when it shoots all the way through the zone and hits stop loss, then they've made a massive loss. Yeah, so you need to manage accordingly, depending on what your situation is with your account. Right. I think. Well, actually, to quickly summarize, right? If it's one of my positions, generally you'll see it's always with these criteria. Baptiste's, which is our other trader, which again, if you've not watched the PDF guide, all the videos in there, which you should have done, but then you might understand. But it says in those videos at the bottom right hand corner of each message in the signal channel, it says who sent it. If it's sent on live, you know who sends it, right? I'm English, Baptiste is French, so it's pretty obvious. Yeah, is it the French guy or is it the English guy that's speaking? Pretty easy, yeah. Whereas if it's sent as a message, you need to see who sent the trade. But you'll notice mine because they're always sent in this format. Like you'll see, like mine are formatted nicely. I basically use ChatGPT to format them. So I tell ChatGPT, buy at 2000, sell at fucking whatever, and it will format it into the exact same format every time. So for this is really easy. You can use the same position size every time. For Baptiste, obviously you need to calculate it depending on how big the stop loss is, whether it's 60 pips. If it's 120 pips, for example, you just half your lot size. Yeah, hope that makes sense. But you can watch the videos on that. If we're placing a trade, which I don't generally send, but Baptiste sometimes sends trades on indices like Dow Jones, Nasdaq, or maybe forex pairs like euro, dollar, pound, dollar. Again, these are swing trades, so you can have time to calculate your lot size on the FX calculator. If you don't do that and you enter with a random lot size and guess, what are you doing? You're doing the exact same thing that you're doing if you do not set a stop loss. You are gambling because you have no idea what your risk is. The important thing you need to take away from this is before you enter any trade, you want to know if I lose this trade, this is my risk. Am I risking? You need to know this. Am I risking £6? Am I risking £60? The number doesn't matter. Then all that matters is you know what the risk is and you are happy to take that risk, right? Because loads of people ask me, Oscar, why don't you put 100 lots on a trade? Well, if I hit a stop loss, I lose 60k with 100 lots. Am I happy to risk 60k? No. Right? Okay? So I put my position size and my risk is determined by what I'm comfortable to risk. Pretty common sense, right? Hope that all makes sense. I've got a question in this sense. Lucas, does it all make sense? I just need to go over how to actually do the layering. Quick question. I was not in the call. How comes market execution is banned? I find it quicker to place the trades. Market execution is fine. It's not bad. This is what I'm just saying. It's bad in the scenario where price isn't in the entry zone. Because if you market execute, let me just it's because you missed the beginning of the call, so you're probably confused. Market execution is fine if we're in the entry zone, but if we're outside of the entry zone, like down here, then market execution is obviously shit. I mean, you can market execute when we come back into the zone, but some people haven't got the time to just sit on there and wait. So you can market execute, yeah, but you just don't market execute at the price there and then here. You market execute back in the zone. That kind of makes sense. Yeah, cool. Right. I think I'm gonna open it up to questions. I've got 8 minutes and then I've got another call. So feel free to unmute your mics. I'm gonna stop the recording now.